Good morning, it's March 2nd, and today is all about rates and inflation. We're going to quickly head over to Longbow dashboard to show you where to find things that are probably important to you so you can keep abreast of the data to make good decisions. So we're going to head over to the Market Insights tab first. So here I'm going to scroll down, and a key figure you'll see here is we're at the 210 Treasury spread. So we're almost there. It was, it was 90 bips yesterday, but we're here at 87 bips. It's pretty important that basically it's telling you that you're earning more in the short term than you are locking up your capital for the long term. That's obviously a problem if you're, getting money and trying to lend it long, or if you're, thinking about other alternatives to what to do with your capital. Obviously, I'd rather just be having short-term treasuries and keep rolling those than to lock up my capital for any longer. So I'm going to head over to my general tab, which has some things that I've pre-populated here. And actually, some things have moved in the last 30 minutes since I put it together. But what you'll find, and there's some things going on in the top 25 tab that I pulled from this here, is that you'll see that things are at the low end of the range. We're talking to 3 to 12 month ETF called bills for treasuries. You're looking at the 1 to 3 year, the SHI, the 2-year note, it's UTWO, the 20-year, which obviously you guys know well, the TLT. And then yesterday we were talking about low vol, and it's still near the low end of its trading range. And so actually several of these were oversold this morning. Now we've got 2. So the SHI, so basically rates going up. So inflation readings have been hot. People are worried about labor. People are worried about inflation overall. So you're seeing that the expectations for the Fed's going to be raising that have gone up. And so it's natural that when the expectations for rates going up, then the securities themselves are going down. We're getting that oversold signal. So the white line is at/near below the green line, which is the low end of the trading range. Same thing here in the TLT, so that's duration, that's 20 years. And that makes a lot of sense as well, is that when the whole expectations of rates, the line's moving up, you're going to see it on both the short end and the long end. And that's what we're seeing here today with the TLT oversold. And so happy to click in there for you. Maybe we'll go to the TLT and look at one of those. Where are we at? You can see that it's bearish short term, bearish medium term. So people got excited here in January thinking that inflation was moderating. The Fed was going to back off. And then just as we've seen with tech's downturn and long duration going back down, you've seen that through February and now into March, where people are getting a lot more concerned. So we've seen a bit of a digger here in the last week with the white line for the TLT going here now to the low end and below the low end of the trading range. And so be careful, guys, because when you're seeing this bearish, obviously when it's a low end, unless you think things are going to really turn around and these inflation readings are going to switch soon, this isn't the time that you use the trading range to buy at the low end. You're better off to be using the high end of the trading range in case expectations turn around, hits the top end, to be able to short or sell if you were holding the TLT, or trim it if it's in a downward bearish positioning, which we see right here with the momentum indicator. Well, that's it for today. Be really careful out there with rates, inflation, your portfolios, risk management, potential increased volatility, all those good things that hopefully you're doing in your risk management process. And we'll see you back tomorrow.